Well, guys, this AUDJPY and the 4 hours time frame, I just want to break down forex in my little understanding. Okay, let's just not complicate this whole stuff. Let's start from the 4 hour time frame. Okay, so it's on the 4 hour time frame. Then a chart like this, you just look first of all look for market structure shift. So at this point now, that's to identify if we are in a bullish trend or in a bearish trend. At this point now, we are bullish. We let's just forget from uh, the past. You understand? Let's forget from the old stuff. Let's come closer where the market is. You understand? So at this point now, we are bullish, right? At this point, we are bullish at this point, and from this bullish momentum, the market has been waiting, has never swept any low, has never closed on any low. So that still signifies that we are in a bullish market. So on the 4 hour time frame, it has clarified to us that we are bullish. So I mean something like this. All these lows are still intact. Nothing has shifted them on the 4 hour time frame. Let's assume we have not gotten up to this place at this point. So we are still here, maybe around dancing around this area. The market has break on the bullish time frame, on the 4 hour time frame to the bullish side. So we scale down to the 1 hour time frame. So 1 hour time frame. So this is our 1 hour time frame. And that was the last high, 4 hour high, the 1 hour the market took before we turned bullish. Please forgive my environment. I'm in a noisy environment. So we became bullish at this point. So let's break it down. See what the market is doing. Market is all about higher highs, higher lows, higher highs, higher lows. Sometimes you learn to ignore all these mini movements. So at this point, the market has taken off bullish. So this is a high, also on the 1 hour time frame. So the market pulled back low. The market pulled back. The market pulled back. And it came and swept this high too. So what I'm here to is teach you is how to catch these moves, these moves, these moves. Are you getting it? See, this move, this move, this move. So first of all, like I said earlier, we learn to ignore this minor thing. This is deceitful. You think that okay, this is a high, then you click it, something like that. At some point, you see that it will disappoint you. Okay, this pair is not really confusing like that. It's not really confusing like that. So it went, see as it was playing normal. The whole lows are not being taken. Our lows are still standing. Our major lows are not these mini lows. This is not a low for me. See, this is a candlestick and it just consolidated here, not quite long. And so this is not a low for me. I can take this as a low instead of this. Okay, so this can be a low. So in terms of okay, you want to catch the whole move on the 1 hour time frame, you can scale down maybe the 4 hour time frame. You can just come down here, mark up this area, and the market took above this high, just like this. market broke this high. Market broke this high around 9 in the morning. Don't know the time you're watching me from, but the time you are on. The market broke around 9 in the morning. Wait for it to go back to this zone. Remember, we are catching the pullback and continuation, pullback and continuation. So it pulled back to this zone. Then it's not too clear here. That's why I don't want to, you need something that you are sure of. Okay, something you're trading, you are sure of. Yeah, okay, yes, the market is bullish, we are moving. Okay, so let's concentrate on what we are here for. Bullish on the 4 hour time frame, although we are on the 1 hour time frame now. We saw this on the 4 hour time frame. We went bullish, then this our pullback on the 1 hour time frame. Then we need to catch this continuation. Then let's go down to the lower time frame on the 1 hour time frame. If this is the first bullish candle we got, you see, before we could catch this, we are almost the market has already run far. So let's go down to the 15 damn minutes, man. Let's get this cooking, baby. Let's get this cooking, baby. Alright. Okay. Let's go. So take it to the left, to the right. Okay, this is a 15 minutes time frame. So this is where I apply moving average. Sometimes, first of all, you read the market structure, please. After confirming that we are bullish on the 4 hour time frame and the 1 hour time frame, then I can earn my moving average. You see, this is my moving average. First of all, if I place a trade on the 15-hour time, on 15 minutes time frame, to confirm that my pullback is over, 90% of the time I wait for the pullback to close, to come down below the 200 moving average. This is a 200 and the 50 moving average. I'll let the price to come down below this guy and close above it. Something like this. It came down here and closed above this guy. You see it? So let's do. We have identified our structure, which we are bullish. Then we go down to the 15 minutes time frame and wait for this is oh man, this is a New York session. Although it touched by a week here. This is the week. Yeah. So pull it back to this place. That like the moving average, 200 moving average helps us to know when the pullback is done. You understand? Sometimes 90% of the time, forex is a 50-50 game. You see it. Mostly 1:3 or 1:4. This strategy can give you 1:4. It can give you 1:4. We will see. Say at this point it has gone here. Your stop loss will be the last low, or you give it space. Just give it a little space. Let it breathe. Let it breathe. Down still scale up to 1:3. You're there. You still get there, bro. You got there. Then this point is deceitful. This guy didn't touch this guy. This guy did not touch this guy. So it's not a trade for us. And let me see. It's in the morning. So let's assume this day was not a good day for us to trade. But coming down to the evening time, so the market came back. The market came back to this point. The market came back to this point. Touched this guy and give us a bullish engulfing candlestick above the 200 moving average. Remember, we are still bullish on the higher time frame. So we are on the 15 minutes time frame, trying to catch these little babies, you know. Then we took this guy here, 1:3, 1:3, and see, this 1:3. Let's assume he stopped us out. Although if we would have extended our stop loss this low, we would have gotten more. But let's not. There's no need to frame anything. It's normal and you can get stopped out sometimes. Then you come down to this side again. Look at this is midnight. This is midnight. Let's assume, although we don't really, you cannot be trading by this time. It's possible though, but this is the engulfing candlestick. This one is too wide. I'm not gonna take it. I'm not gonna take this guy. Can come here or still take this one. Understand? And put my low just here. Let's assume this is the one we take. It's not too late then. And target 1:3 or 1:4. It can give you more than that, you see it. Then this is another pullback. Let me not waste your time. This is another pullback. We are still waiting. We're still waiting. This guy is dropping. On the pullback, you see the market structure. It was here. Higher, higher high, higher low, higher high, higher low. Didn't make another higher high. You see? Then it pulled back and break this low. It break this low. Then we are bearish on the 15 minutes time frame. That is a pullback on the higher time frame. It's pullback. It's just pulling back. So it pulled back higher, lower, just low, high, low, high, low, high, low, still breaking those lows. So you can still wait for price action. At this point, it has given us an indication that, bro, we are about to go up. Then you wait for it to come and close above. If you just want to trade price action, it gives you an indication here we are going to go up. Then you wait for it to get done with its shade. Then when it closes above this line, any candle closing above this line, bullish candle, take a buy from here. Reduce your risk. But that's not what we are here to talk about. We are talking about this guy closing above this guy. Higher high, higher low, lower, lower high, lower low, something like that. You know, this kind of low, 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 low. It's kind of confusing, but you know what I mean, man. So at this point, take this and bring our low a little bit. At this point, it has gone a little bit far, so you don't risk too much. Let your pips not be. Let your low don't risk too much. You understand? Then it's more than 1:4, bro. It's more than 1:4. You see it? Then it comes here. What time is that? It's in the morning. Oh, what's up, man? This in the morning. Then you count this place and see today. Look at today. You can check the date. This way it is. It is what it is. It came down here. This is a straight movement down, and this one gave you this. So you have to be careful, bro. It did not give us that kind of zigzag movement and come and give you immediately and give you engulfing hands. It's deceitful. Like they're trying to just pull you, you know. You just wait. You need that sign that yes, this guy is done with his shit. Then at this point, you see, it's done with the nonsense it's doing. Okay, you will not be right 100% all the time. Just know that that's for trading for you. Then take it around here. This around New York session. Target 1:3. So 1:4. But at this point, let's be honest. At this point, the market has pushed too high. So it needs to exhaust. Let's go to the higher time frame, a little bit higher. The market has pushed too high. There's an exhaustion that is supposed to come. See, there's an exhaustion that is supposed to come. So in the higher time frame, we are still bullish. There's an exhaustion that is supposed to come. Well, you gotta risk it, man. Just take the buys. It's according to your plan. Just take it. If it's a loss, if it's a loss, it's a loss. But look at. Okay, just look at this chart. You win here, you win here, you win here, you win here. One is to trade risk to reward. Even if you lose two trades in this, so you're still profitable. You got me? You got me? Yeah, man. Yeah, man. Thank you, bro.